Thank you for joining us. Today we're going to talk about U.S. income-producing properties that can be picked up for about half the cost to build these properties brand new. And they've been specifically packaged for international investors that don't want to collect rents directly, manage tenants, or maintain the properties themselves. We have property management in place to help us achieve net yields of about 10 to 13% annually while we wait for the market to rebound. We're going to cover four things today. Number one, how we evaluate these properties for long-term capital growth and short-term income. Number two, why we are in the Atlanta, Georgia market and why so many investors are parking their money in what is appearing to be one of the hottest emerging markets in the United States, with key fundamentals pointing to future job growth and economic stability. Number three, we're going to highlight property management and how we're able to keep these hands-off ownership so that we don't directly have to manage tenants, collect rents, or maintain these properties ourselves. And then lastly, we're going to showcase three properties that are currently available for our investors. They've all been built in 2005 or newer, and they're a cross-section of the different product mix that we have available in Atlanta, from condos, townhomes, to a single-family home, priced from about $49,000 to $77,000. Our properties are evaluated for financial performance at three different levels. Number one, where are we going to get the maximum income or rents on a property for the smallest purchase price, the smallest expenses, and the least amount of risk? Number two, where do we have our best potential for long-term capital growth? Are we able to buy these properties at a substantial discount below the current appraised value for like properties? And what are the indicators for job growth and migration to that area? And then finally, do we have an exit strategy down the road? Many investors make the mistake of doing a lot of due diligence on the front end without any consideration on how they exit the property, because we make our money on the buy, but we realize our gains when we exit the property a few years later. Now, obviously, a key to competing in the rental market is to deliver a property that shows extremely well, that stands out from the competition. So all of our properties are delivered completely renovated or freshly finished with new paint, new carpet, countertops, fixtures, and new appliances. Additionally, we throw in a home warranty so that the new investor is going to have limited maintenance or repair surprises in the first 12 months of ownership. As previously mentioned, we do have property management in place, so we've done a great job identifying property managers to work on your behalf, to do rigorous tenant screenings, to collect the rent and also maintain these properties, so you're not the one receiving the phone calls about a plumbing leak at 2 o'clock in the morning. We do bulk negotiations with all of our property managers because they have so many properties under management. We're able to negotiate a lower property management fee than your traditional 10%. Our property managers typically charge anywhere from 6 to 8% of the gross monthly rent that's collected. And for additional peace of mind, we offer a 12-month rental guarantee, which essentially means from the time that you close, within 30 days of your closing, you're going to receive your first rental check less the management fee. 11 months thereafter, you're going to continue receiving your gross rental check guaranteed by the seller. Okay, now let's talk about the Atlanta market. If the Southeast United States was its own country, it would be the fourth largest economy in the world, with Atlanta being the center of that economy. From the years 2000 to 2008, Atlanta, Georgia was the fastest growing metropolitan market in the United States. Currently with a population of about 5.5 million, it's home to some of the most recognized brands in the world, and as you can see from some of these brands, the impact on jobs in the local area. And according to Moody's, it's in the top 5th for job growth of all metro cities in the United States. And of course, the rebounding of our economy is going to follow job growth as the number one factor. Another factor that impacts real estate market conditions is migration, or what we call in-migration, which is movement of the population within the United States. And one of the biggest buying groups you want to stay in front of is the boomer generation that was born from 46 to 1964. It's 80 million individuals that have impacted every part of our economy as they've been growing up. They're now starting to retire, and you're starting to see a big migration from the Northeast, where you have a lot of cold weather, down to the South. Now, Atlanta is in front of that movement for a couple different reasons. Number one, from a personal tax perspective, it's a very tax-friendly state. When you consider your total tax burden, it encompasses the state tax, the income tax, and your property tax. Georgia in general has the 6th lowest total tax burden for individuals. So for individuals that have a fixed income, that's very important. The two factors that are most important to retirees as they migrate is number one, weather, where you have a very friendly climate year-round in Georgia, and then number two is hospitals. So you have to have very good medical facilities for obvious reasons. Now, someone once said in real estate that if you want to make money, just buy where people want to move. And as you can see in Atlanta, the Census Department projects a 20% increase in population through the year 2013. Now, we talked before about the cost to build. What kind of discount are we getting on that real estate? Now, in the South, it's $76 per square foot to build real estate. That only considers the cost of labor and materials. What it's not considering is the cost of the land and preparing the land to build, so the water, sewer, paving of the roads, entitlements, and so forth. So when you include prepping the land and buying that land with the cost of materials and labor to erect a property, we're all in at about $90 to $100 per square foot. So the question is, what are we paying per square foot now compared to what it costs to buy land, prepare the land, and build a property brand new? So over time, we're going to see the gap close between what it costs to build a property new and what we are paying for the property now, assuming we got it at a discount. All of our properties are priced from about $40 per square foot to about $50 per square foot, somewhere in that 40 to 50 range. You're walking in with a tremendous head start just on the purchase price. The primary measurement in real estate that most reveals price trends is your absorption rate. Now, essentially what our absorption rate tells us is how long it's going to take to deplete a certain amount of inventory based on a historic sales rate. So let's take, for example, a toy store. Now, in this example, we have three types of toys that we have on the shelves in our toy store. Now, we may have on average about 10 months of supply in our toy store, but there may be one toy that sells a lot faster than everything else. In real estate, if we want to buy ahead of the herd, not with the herd, that's a key distinction. We want to identify the submarkets within a market that is selling faster than everything else. And in Atlanta, we found that submarket. It's what we call our high-impact entry-level homes. Now, we like this niche for a couple different reasons. Number one, it's very easy to purchase these properties at entry-level prices from $50,000 on up to about $80,000. The second reason we like this market is because it offers the optimal yields of about 11% to 13% annually. The higher we go in price, the lower our proportionate rents and the lower our net yields. Same thing on the other end, the lower you go in price, the lower your yields start to get. So we kind of see this ideal sweet spot, again, around the $50,000 to $80,000 price range. While we're talking about income, half of the equation on our income is our property manager. That's who dictates the quality of our tenants, the amount of our rents, and how well the property is maintained. Our local property manager is RE/MAX Executives of Atlanta. Due to our buying power and the number of properties we have under management, we've negotiated a couple things that are benefiting our investors. Number one, when RE/MAX Executives finds a tenant for your property, there is no tenant placement fee. Typically, your tenant placement fee, when your property manager finds a new tenant for your property, is usually around 75% to 100% of your first month rent. In this case, your initial tenant for your property after purchasing will be free. You're not going to pay a tenant placement fee. Another benefit, as we mentioned prior, is that you have a discounted management fee of only 6% as opposed to your traditional 10% management fee. And as we previously highlighted, you do have guaranteed income for your first 12 months of ownership, the first rental check received within 30 days after closing. The stability of our income is dictated by the quality of the tenants we're putting in our properties. So while we can get our properties tenanted faster than the typical 2 to 6 week window, our property managers put rigorous attention in identifying the very best tenants for the property for both maintenance and financial reasons. More time, energy, and attention to detail now is going to save us a lot of time and money later. To limit your exposure to any potential maintenance or repair surprises in the first 12 months, all of our properties will come with a limited 1-year home warranty to cover any major systems and appliances. Now let's get into the sticks and bricks. I know a lot of you have been curious to see our featured properties. What we'll highlight tonight are 3 properties. Again, one is a condominium, one is a townhome, and one is a single family resident. They're priced from $49,000 on up to about $77,000. And we're looking for the same thing in our properties that a tenant would look for in a rental. We want safe neighborhoods, easy access for commuting and airport access, and local conveniences from medical facilities to shopping, schools, and grocery stores. The first of our properties is a brand new townhome priced at $69,900 or $47 per square foot. This brand new property has never been lived in. It was built in 2008. We have 3 bedroom, 2 baths, about 1,500 total square feet. The monthly rent on the property is $900 a month. The total for the year, $10,800. That is the guaranteed gross income that you will receive for this property your first 12 months of ownership. That's what's included in your rental guarantee. Obviously, as the investor, you'll receive that amount less the management fee of either 6 to 8%. The annual expenses on the property include your management fee of 6 to 8%, your insurance of $500 per year, and your property tax. And we'd be happy to provide detailed expenses if you're interested in exploring further. But on this particular property, we have $8,400 of net income, which is about 12% of our purchase price. Our second property is a single-family home at $40 per square foot. These are larger homes. They've never been lived in. These are freshly finished single-family homes, oversized at almost 2,000 square feet. We have $12,000 of annual income on these properties between a small homeowners association fee, property tax, management fee, and the insurance. Our total expenses are $3,200 a year. That leaves us with about $8,800 a year, or about 11.5% on our net yield. The last property we have tonight are our condos. They're 3 bedroom, 2 bath condos. We also have some from $49,900. The price on these, $40 to $46 per square foot. These condos were built in 2006 to 2007, encompass 3 bedroom, 2 bath, nearly 1,300 square feet, very good sized condos. Rents on these will be anywhere from $8 to $850 per month for a total annual income of about $10,000 per year, leaving us with about 11% net yield on our cash investment. So that concludes our presentation today. In summary, if you're interested in making money in U.S. real estate, purchasing properties at half the price to build, and having property management in place to carry your ownership on your behalf, feel free to call us. We'd be glad to have a one-on-one consultation with you. If these investments appear to be a good fit for you, we'd be happy to walk you through next steps. I want to thank you for joining us. We look forward to talking to you shortly.